I'm Charlotte McLeod with the Investing News Network, and here today with me is Peter Grandich of Peter Grandich and Company. Thank you so much for being here online with me today.
Nice to be with you.
Yes, it's nice to be talking with you. And I think where we're going to start is with gold. It's been a difficult couple of weeks for gold, although overall the metal has had a good year. Definitely experiencing some headwinds right now, though. So, what do you make of that price activity? Let's start with that.
Sure. We had a near-parabolic rise earlier this year. It's not uncommon to see a substantial correction not long after that. I think that's what we've experienced. It's come at a time when there's a rampant speculation in what's normally the enemy of gold, and that's financial assets. On top of it now, there's a once again renewed love for what I consider a highly speculative investment vehicle, Bitcoin. But between that and the general stock market and the need for profit taking, I think we witnessed it. The good news out of it is the rampant bullishness that we saw just a few months ago, where just about everybody was predicting 3, 4, 5,000 on gold. In recent days, a lot of headlines of people talking about it going much lower, or the best of it has been seen. And those are the type of things, sentiment-wise, that needed to be washed out if we are to go to some of those levels that people predicted. So we might still see somewhat little lower because, the paper market gets pushed around a lot more than the physical market. But I think once we're into 2021, this will be just a memory, and we'll be at a 2,000 and something price, not too far along into the year 2021.
Right. And, as we have these shorter term fluctuations, one thing people keep reminding me is that it's really about the big picture for gold right now. So, for you, what would you say are the main big picture drivers of gold at the moment?
Well, I think the mistake that some people have made is they think this has been COVID driven, because if it was, then it's hard to explain the 18 months before COVID came on board that gold rose fairly sharply. I think it has been and will continue to be dominated by the basing of currencies worldwide. There's no longer a standout among any currencies, and with interest rates so low, gold makes a natural case for what it's usually been for several hundreds of years, and that's an alternative to paper money. So I just think that that'll continue. The fact that here in the U.S., the apparent winner of the election has already nominated or is talking about nominating Yellen into Secretary Treasurer, and between Yellen at Treasury and Powell at the Federal Reserve, I think the printing presses are going to continue going pretty 24/7, and that's always another important thing. Plus, we now have substantial concerns about an inevitable inflation whip, and it won't take too much of inflation to cause people concern, because interest rates are so low that it won't take much of a pickup in inflation for people to start talking about that ugly word again, which hasn't been heard in a couple of decades. So I think all those things bode well for the future of gold price.
Right. I keep hearing as well that COVID was more of an accelerant to things that were going on. Would you agree with that idea?
Yeah, I think it added to it, but I don't think it was the basis for it. And I've been at this 36 plus years, and the media always needs a reason for why something did something. A lot of times it's just simply more buyers or sellers or vice versa, but they have to put something more than that. And so I think COVID has been more of an excuse than really the main reason why gold went up or down.
Right. And you mentioned how long you've been in the industry for. I wondered if the circumstances that we see now, is that similar to anything that you've seen before?
Well, the markets have changed dramatically. They're nothing like when I first started across the board. It doesn't matter what market we look at, even in the gold market, although it's still influenced by the paper market, but it's not as much as it once was. But I think in the general equity market, those who continue to use statistics or ways of looking at the market from 30, 40, 50 years ago may be in jeopardy, because those calculations just don't fit the criteria of what's making the market these days. So I think there are reasons to be more concerned about using old-fashioned style measuring. But in the gold market, it's still pretty much the same, but with some ambiances of changes, especially since now people are able to trade at such low or zero commissions. That has really influenced even the junior resource market, where no one bought 1,000 shares and traded it for a penny or two 10 or 20 years ago, but now that's very common.
Okay, very interesting. This is our first time talking, but I know from listening to some of your other interviews that a couple of years ago, you went all in on gold and mining stocks. I wanted to ask how you made that decision and if you've changed your position at all this year, given the price activity that we've seen in gold, especially over the summer when it was quite high.
Well, you're correct. I actually left working within the metals and mining industry back in 2014. But in 2018, despite everything my wife had to say about it, I decided to change our portfolio dramatically. And other than one general equity stock, I put the balance of it in physical bullion and mining shares, which was, something that wouldn't suggest to most people to do. But I was so moved on the belief that the gold market was about to enter a very strong cyclical bull market, and the mining shares were extremely cheap. And then when we ran up towards 2000 earlier this year, just somewhere maybe around 1970, I can't remember the exact number, I suggested it was time to take a lot of those profits. But I did re-enter recently back when gold got towards 1850, now, closer to 1800. But part of the reasons was simply because no one really wanted or believed that was a good thing to do. And gold has been a very, very misunderstood investment vehicle. And I have to say one thing, Charlotte, that I don't own it for what some people do. I'm not fearful that I need to get a loaf of bread or I'm going to move to the woods to survive Armageddon. I own it for capital appreciation and only capital appreciation. And it just appeared to me that it was a much safer and better bet at that time than general equity was. And I think even more so now.
Okay, and that's very interesting. So you're not sitting there hoarding all of your gold, waiting for something bad to happen. This is purely what could happen with the price.
Right. And I always tell those people, and I used to hear them when I spoke at the shows, and Vancouver was once my home away from home, and I loved going there and speaking. I always tell those people that you may have gold and it may get you a loaf of bread or something in the early days, but the people who don't have it will realize that you do have it, and you won't have a big enough army or enough gold to hold off those people from taking it. So I just don't get involved in it for that reason. I strictly look at it as a capital appreciation, and also when I'm concerned about paper money, which I am now. And I think it's a much better choice than any other currency. So that's another reason to own it.
All right, now looking at the mining companies right now, majors, mid-tiers, juniors, which are most appealing to you? Where do you see the most potential for gains right now?
Well, you can never not argue that the most potential for gains are in the lower end of the second sector. The junior resource market is always going to have the potential. You can never deny it completely that something can't go up 1,000 or 5,000%, but there also lies the most risk. And I always used to tell people in the junior resource market when I spoke to audiences that if you're going to own those type of stocks, you got to recognize that you're gambling. Now, Wall Street likes to use the word speculation, so it doesn't have to say gambling, but gambling and speculating is the same thing. And you have to be prepared both financially and mentally to lose part of all your investment. And if you are, the junior segment is where I think the majority of mergers and acquisitions that's going to be very much increased as we get into 2021 and beyond will be in the mid-tier producers. And the reason is that they are pretty well finding it difficult to grow now because reserves are down so much. I think reserves are down like 50% over the last decade. So the majors, we're probably not going to see the top 5 or 6 merge with each other anymore. That's kind of done. But since they are looking to add to the reserves, they're going to look at the mid producers. But the mid producers now are having difficulty growing themselves because there's a lot of them. I'll give you an example if you don't mind. I was once, I think, the second largest individual shareholder of Teranga Gold. Wonderful company, superb management, grew, stock went from about 2 to 10 to 12, and then it found itself that it was getting more difficult to grow. Lo and behold, a company that seemed to be in the same situation as them, Endeavor, came along and said, if we combine ourselves, we'll be able to be more like a big producer and get re-rated. And so we've seen this announcement of them merging. I think those type of deals are going to become prevalent as we get into 2021. But where the real opportunity is, and I hope I'm right because I put a lot of capital in it, is in a budding gold rush. And that's taking place now in Quebec. And it's where I think people are going to have to reach because of safety. It's become, when I started, Charlotte, in the metals and mining business, you could take a world map up and maybe point to a few places and say, well, I don't know if I exactly want to go there. It's not the safest place. Now you take that same map and you go, well, just maybe there, or there, because if it's not safety, it's environmental. If it's not environmental, it's regulation, et cetera, et cetera. And so I think what somewhere's in that middle group to higher past grassroots junior resource stocks are going to be the big winners as we go forward into 2021.
Okay. Now, looking again just overall at the gold market, are there any other trends? You've mentioned a few, but things that people might be missing right now that might be flying under the radar as all these other things are going on?
Well, I think the biggest thing is if you're going to watch general financial news service, and I'm not speaking of your fine service, I'm talking about the typical networks and everything out there, you have to learn one thing, and this is again an old Grandich slogan, and that is Wall Street treats gold like kryptonite. So you're just not going to find encouragement or support from people that are, in a sense, peddling or whatever you want to call it, selling financial assets. So it's very hard if you want to stay in this industry to believe that you're going to get support from people that are really feel that what you're investing in is goes against their principles. I think the other thing that's important now to understand is that it's very become more of an investment than, say, what jewelry used to be. When I was in the metals and mining industry in the early days, jewelry demand made up almost 80% of demand. Now investment demand is the key factor to what happens to the gold price. So it's very important that you keep measuring how investors are looking at it. That's why it took comfort in recent days. The physical reporting of purchasing of gold remained strong or got stronger in recent days, even though the paper market went down. So I think that's another thing people have to watch.
Okay. Now, I think that's given us a pretty good idea of what's going on in the gold market. I also want to talk about uranium, which I know is a market you're interested in as well. It's also a market that's really suffered over the last decade or so. So, to start off, let's ask what interests you in uranium?
Well, the first is I never was involved in uranium. I mean, there's people that over the decades have been. However, about a year ago, I was on the internet and I saw a very interesting gentleman speak about it. And I didn't realize that it had gone to that depths of, despair was the only way I could describe the people that have remained in that industry felt. And yet, when I took a look and looked at the supply and demand scenario, it seemed that it was moving in the very right direction. Supply was dropping dramatically. Demand was constant or likely to go up. So it interests me. And as I looked at it, I was somewhat shocked and never realized that there were such few producers, the actual companies that actually go and produce it. And so my feeling was, and when I started to understand about how utilities had to take time on long-term contracts and how the industry works itself, it looked like just about now into 2021 and 2022, these utilities are going to have to come back into a big way to secure future supply at a time when demand overall is growing, and now there seems to be a reliving of nuclear as part of this green movement overall in the world. And so I focused on the one or two major producers because to me, I'm a utility. I want to be certain of supply 5, 10, 15 years from now, and not so much on a company that may or may develop a mine. And they will do well because the uranium price go up. But from an actual business standpoint, I started at the highest level with the one or two key producers. And there will be emerging producers, companies that are close to coming into and developing a uranium mine. But I think the bulk of the early initial gains will come from the main producers. And of course, there, Canada has the premier company and they have a phenomenal management team. I wish all mining companies had a management team like Cameco has. So I really think that's an important thing. And one of the reasons why, for lack of a better word, some people describe me now as a uranium bug, like a gold bug.
All right. And in uranium, we hear all the time that it's a when story, not an if story. Do you have any sense of when that turnaround for the sector might be coming, or is it really simply a matter of being in there and being ready for when it does come?
Well, I think it's turned already. I mean, the price is off the bottom. It may not turn fast enough for the few that remain in it because people have such frustration. They've been in it for a lot of years. They've heard a lot of people speculate that the turn is coming and it didn't. And so if it doesn't happen right away now, or if it turns back a little, they all get disappointed and disenchanted. But I think you can argue that it's in the earliest stage. I don't even think the people have arrived at the arena yet. I just think people have heard about a possible good ball game and they're planning on getting to the arena. So I think we're in the earliest stage of it. And I really think it will take hold next year in 2022, because that's when utilities are really going to have no choice, unless they want to shut down the nuclear reactors, are going to have to come to the table. And I think that's when we're going to see it. So if you want to wait to the last possible minute, I guess you can. But as you said, I think you want to almost position yourself now, because I still invest over years period. I know the market seems to invest only over hours and days now. But I think if you can look past our noses and look into a year or two from now, I think uranium has a lot of upside. And one of the things I think it definitely has, and why I put so much confidence in it, not the general equity, I don't think there's another 50% loss coming, but that is possible in the general equity market. And if I learned one thing over 36 years, it's not how much you make, it's how much you prevent from losing that keeps you having the opportunity to make money.
Okay, I like that comparison there. As we are wrapping up here, are there any final words you would leave investors with as we head into the final month of the year and into 2021 as well?
Well, like I said earlier, for me, my focus primarily now is within the gold market, within a gold rush. Right? As I told you, like a place like Quebec now that clearly has demonstrated that there are multiple companies. I don't know, can I mention the companies? Is that okay?
Yep, you're
Great.
you're allowed.
Okay, so my portfolio consists of these four. I own them all. I don't have any relationship with the companies. I don't receive anything from them. So the only thing I guess I'm speaking is my own portfolio. So the first one I think that's going to go, and it's going to go out as a takeover, I think fairly soon, within a few months, is Amex Exploration. They've made phenomenal discoveries. They have 10 drills going. I think once they come out with their initial resource, they have to be acquired. So that's the first one, and one of the ones I own. My largest personal holding is in a company called Vanstar Mining. It already is in a joint venture with IM Gold. There is an initial resource deposit of 3.2 million ounces on a deposit called the Nelligan. Between what their ownership in the Nelligan and their NSR is more worth than the current market valuation the stock is at, and it has tremendous upside potential. They just scratched the surface there. And I think IM Gold also, by the way, because of its many difficulties, is probably going to be a target soon. And they're going to have to develop that on a faster pace. And I think that'll be the second one. Now, the other one that's my second largest holding is an interesting play as well. And it kind of ties into Vanstar, and that's a company called Northern Superior Resources. They have a major play in Ontario. They have a fairly significant deposit already in one area, Quebec, but they have a property that ties on to the Nelligan, and they had a drill hole come out. Now, most people would see that drill hole and go, oh, it's nice, but it's not the greatest thing I've ever seen. But if they understood the characteristics of what makes up the Nelligan deposit, and the argument that we believe that it not only goes on to Northern Superior's project, but they may hold another Nelligan project and larger, and they own 100% of that deposit, where Vanstar only owns 20% of theirs. The potential of these next few drill holes, identifying that, will make that stock what one great mining newsletter writer that I still respect to this day for over 25 years, John Kaiser, is called a 10-bagger. So, and those are the things you want to look for in the junior. And then the fourth one is a company I just started to buy called Radisson Mining. It has the largest undeveloped high grade deposit in North America. And again, I think all those four are candidates of a takeover in the next 12 to 24 months. And why I bring that up, other than just because it's my book, I think you still have to buy stocks as you want to be part owners of businesses. I think younger people have forgotten that. They trade it because it's news story or a computer has told them to do it. But if you look at stocks to what they used to be, at least part ownership of businesses, and can justify that you want to be an owner in that business because someday you could sell that business for a lot more than you bought it. I think in the gold market, a play like this in an area like that, you need to focus on it. And so I think the way I would leave to everybody is go back and try to be old style and buy stocks based on what they originally were set out to be, and that's part ownership of businesses, not because there's some commodity or because some guy on an interview said so. But if you can look at it and really say, yeah, I like to be part owner of that business, then go ahead and buy it and not expect everything to happen right away. It still takes time for businesses to be successful, especially in the environment that we're in now.
Okay, well, thank you so much. It was great to talk to you, and I think you gave us a lot of things to think about.
Well, thank you, Shaw. It was an honor speaking with you.
Once again, I'm Charlotte McLeod with the Investing News Network, and this is Peter Grandich.